Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 4th of July. UK's Osborne says he plans to slash corporate tax. Over the weekend, UK Chancellor George Osborne said that he is planning to reduce the corporate tax rate to 15% from 20%. Osborne suggested that such a move would encourage businesses to continue investing in the UK even in a post-Brexit environment. Following Carney's statement last week that the Bank of England is likely to cut interest rates over the summer, this is yet another step intended to deter the outflow of capital from the country and to attract new investment inflows. Even though a slashing of the corporation tax could generate questions regarding reduced government revenues, we believe that it is a meaningful way of addressing the nation's significant current account deficit. The deficit was previously expected to balloon under a Brexit, as foreign investors may have been discouraged to invest in a highly uncertain climate, thereby threatening to devalue the pound. We therefore believe that this announcement could ease some of the downward pressure on sterling in the near term and is likely to cause UK equities to gain even further. In Australia, federal elections did not indicate a clear winner this weekend, spreading uncertainty regarding future government budgets and the possibility of a hung parliament paralysing the country. Aussie dollar opened with a gap lower on Monday, but quickly recovered the lost ground. The recovery of this pro-risk commodity currency may have been the result of improving investor sentiment, evident by positive closings in almost all Asian stock indices today. Approximately 80% of the election votes have been counted so far, and ballot counting will resume on Tuesday. We believe that this uncertainty could generate renewed volatility in Aussie dollar, at least for today. In any case, the pair's near-term direction may be determined by the outcome of Tuesday's RBA policy meeting. As for today, during the European day, the UK construction PMI for June is expected to have declined somewhat. Given that these are pre-referendum data, though, we don't expect any major market reaction. Eurozone's PPI is also coming out. From Canada, we get the RBC manufacturing PMI for June. Markets will remain closed in the US in celebration of the Independence Day. We have no speakers on today's agenda. As for the rest of the week, on Tuesday, the RBA will meet to decide on its course of its monetary policy, and expectations are for the bank to hold its fire at this meeting. Following the upbeat tone of last meeting's statement and minutes, and given that the labour market improved further since that gathering, we consider it unlikely that the bank will act. What's more, we don't expect Brexit effects to substantially affect the RBA's outlook, considering that both Britain and the EU are relatively small trading partners to the Australian economy, and that the market impact has been rather contained so far. Overall, we expect the official statement to strike a dovish tone with regards to global developments, but not to clearly hint policy action, at least for now. Something like that could support the Aussie on the decision. Moving forward, though, seeing that the bank responded immediately to the decline in the first quarter inflation rate by cutting rates back in May, we believe that the second quarter CPI print may be the determining factor of whether a rate cut could come in August. On Wednesday, the Riksbank will hold its monetary policy meeting as well. We expect the bank to remain on hold, but to signal a strong easing bias moving forward. In the US, the Fed will release the minutes from its June monetary policy meeting, where the committee remained on hold and lowered its rate path projections for 2017 and 2018. On Thursday, the US ADP employment report for June is coming out just one day ahead of the non-farm payrolls. From the UK, we get industrial production data for May. Finally, on Friday, investors will be awaiting the US employment report for June. The forecast is for non-farm payrolls to have risen by 180K, up from a mere 38K in May. The unemployment rate is expected to have risen to 4.8% from 4.7% previously, while average hourly earnings are forecast to have grown at the same pace as previously. We get Canada's employment report for June as well. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.